Should you be investing in the stock market right now? Is it a good time to invest in the stock market with all this uncertainty about the coronavirus and the stock market crashing? Well, in today's video, I'm going to go through exactly that, give you some advice and what I'm personally doing myself. So if that sounds interesting, let's get straight. Before I start, as always, make sure you like this video and subscribe down below. First, let's go back 10 to 12 years ago in 2008, where there was a massive recession and the whole economy went down, as well as the stock market crashing and was in a massive bear market. And since then, it has been seen that we have recovered quite well. In 2019 and 2020, companies have hit all-time high, and we were expecting a recession to happen either this year or maybe next year. As history has shown us, every 10 to 12 years there tends to be a recession. And as currently the whole stock market is crashing, since the last month it's gone down by 20 to 30%. Although this isn't a recession at the moment, the coronavirus is helping to lead into a recession with the economy going down and companies are struggling, as well as the banks and the government have to inject a lot of money to save a lot of companies. So what should you be doing in this situation? Should you be like everyone else and panic selling to cut down your losses, or should you be taking this as an opportunity to build a lot of wealth? As we are currently in a bear market is when the stock market drops by 20 to 25%, and this has happened in the last month. So what we should be doing is taking advantage of this opportunity. As sad as it is, coronavirus spreading in the whole world and killing people, but we should also prepare for our financial wealth. And this opportunity is great because Warren Buffett, one of the greatest investors of all time, states we should be greedy when others are fearful, and we should be fearful when others are greedy. As this is quite a low moment in the stock market and people are fearful, we should be greedy in sense of buying stocks and shares when the prices are really low. The reason why you want to start buying stocks right now is because you can get it at a discounted rate. So say if you was at a supermarket and you want to buy toothpaste, that which usually costs £1 or $1, and right now it's for 50p or 50 cents, you would want to buy more because you're getting a better price, because you know it's half the price at the moment. So you might stock up and get 5 or 10, 15 toothpastes. The same applies to stock market. So if the share price of Apple, which it was last month $300, and now it's gone down to $225, you essentially get more shares for less money. So you would want to buy at a discounted price because it's a no-brainer. You want to buy those shares and you're getting a cheaper price. So why wouldn't you? It's the same as the supermarket. You're not going to be like, no, it's cost 50p, it's half the price, I don't want to buy the toothpaste, I want to buy at a higher price. It makes no sense. If you was a short-term trader or short-term investor, yes, buying shares might not make sense, but if you're a long-term investor, which I am and I recommend you to be, invest in stocks for the long term. In 3 to 5 years time, that's when you should consider selling the stocks, and this will avoid you panic selling. So if the stock market drops further down, you feel tempted to sell your stocks because you're losing more money. But say if you don't look at it for 3 to 5 years time because you have good belief that the company will be able to recover and start performing well, then you shouldn't really be worried about right now in this situation. It's the same as if you're buying a property. If your intention of buying a property to obviously sell in 5 to 10 years time, increasing its value, and that's when you want to sell it, you won't be looking everyday basis of how much it's worth, because it doesn't make sense doing that. You want to look maybe in 3 to 5 years time when the property price might actually increase. The same applies to here, and if you use this method, you would actually be able to build a long-term wealth. So if you're new to investing, what I would recommend you to do is invest in safe companies or mutual funds. Safe companies like your Apple, your McDonald's, your Facebook, where you know they've got a lot of cash aside for situations like this, and they can survive for another 2 to 5 years with the cash in holdings they have. Like Apple, they've got over $200 billion in cash. They can easily survive for a good 2 to 5 years, paying for all the expenses, etc. A mutual fund is a combination of different stocks of different companies and its different sectors, and what this basically does, it helps you diversify your risk. Say if the technology market has decreased and gone down by 10%, but the real estate market has increased by 10%, it will average it out. And what that basically means is that you will not lose your money, or the market won't go down as much, and it's like more of a slow and steady growth of the averages of different markets. And that would actually help, because it's, for one, safer, because you're unlikely to lose all your money, because obviously the different sectors they invest in. It also gives you a long-term steady growth, which is what you ideally want. But again, make sure you do your research. Don't just take my advice. Look into, do your research of like these safe companies like your Apple, your McDonald's, etc. Also look into the mutual funds that you might be interested in. There's a lot of different mutual funds for different sectors, so make sure you do your research before just investing in any. I hope this video has given you an idea and an indication somewhere to start of what you should be considering and looking into in this sort of situation that we're currently in. I'm going to end it with this. Most people make the millions and become financially independent and financially wealthy in situations like this. This is where the opportunity arises, and you have two choices: either to take advantage of this opportunity and actually do your research and start investing, start taking risks, or you can just be doing what the majority does, and which is just lazing around, watching Netflix, just watching TV, doing nothing. So it's up to you what you want to do.